All right, everybody. So let's go ahead and try to get this position filled. Yesterday would have been a great time to put that on, but I said I would start today, so that's what I'm doing. We can see, throughout the day it had come up, and towards the end of the day it had hit lows for the day, so that would have been more ideal. Still, today with the gap up, I still think we're fine. Position is okay, especially with SPY jumping over the 100-day today. That line is still kind of holding, so we'll see, whether MACD rolls over here or if it continues up. Obviously, that depends on what the Fed does here in just a couple minutes. So, after reviewing the video yesterday and actually reading the error message, the issue with the position here is that it doesn't like the concentrated risk because I only have $1,000 in the account. So to do two contracts in here, it was not happy. So we'll see if I can do it today or not and actually get filled. So basically the process here is, again, I want to make sure my deltas are showing. So right now we're at 11 and 9. And we're collecting 116. That is plenty credit, and I'll go over why that's a good amount of credit for 1,000. But I mean, we're collecting over $100, and our account's only 1,000. So right away, you should be able to tell that that's a good percentage of the account as far as if we were continuing to do this for the whole year. What kind of ROI we'll get, but I'll get into that later. So right now it's showing 512, 510, so we'll see if it actually fills here. So I did put the credit to the upper end of that limit, and then we're just going to sit here and give it a moment. On these trades here that move $1 at a time, it's not the end of the world to come down to meet the market. Some people on Robinhood or even on Tastyworks will think they're getting bad fills and it's the platform's fault. And really what that amounts to is the recommended number that they're uh, recommending you start off with. That's all it is. You're not going to get a worse fill on Robinhood, at least that I've never seen evidence. I've done trading on many platforms, never seen evidence that Robinhood is giving you worse fills or consistently worse fills, enough that I would not recommend doing it. And to me, if you do lose $1 over there, it's kind of offset by commissions anyway. Um, so it really just depends on how stubborn you want to be for that price. And then let's say I come in here, we can see the mid is right around 114, and we know that um, over here it's 113. You're going to get different numbers on every screen, on every platform. That's just kind of the way it is. But the idea here is you start with the upper end of the range and just slowly work your way down. Yeah, and again, if I was being very persistent, I could just let this order hang out there all day, and it may or may not fill. The question is, how quickly do you want to get into that position? With these positions, it doesn't really move that fast in either direction, so there's actually more of a chance that this may or may not fill if I were to keep it at 115. If you're closer to at the money and the stock is fluctuating a lot, then you're going to um, miss the move and it will never fill. Or no, let me restate that. It will fluctuate so much that you'll get the fill, is what I meant to say. Um, but with this, it's going to be moving a lot slower, so it's a potential that it just never even hits. That said, usually when you enter these positions, they go against you for the first bit. So, or at least it appears that way. Again, because the numbers that it's showing you. I'm sure I'll get filled here around 110. Now, because these are naked, it's actually going to fill a lot quicker than if you're trying to do a spread, if you get the price right. And that applies to opening and closing. Because I have two different strikes here, that might take a hair longer, but the less amount of contracts and strikes you have, the quicker fill you'll get. There we go. Okay, so then I come over here to fill, and it always wants to do this where it says the fill is dramatically different, so then I just refresh, come back here, and there we go. It's 110. So now I come over here to Tasty Tracker. This is my site if you're not familiar. This screen will look dramatically different in the coming months. I'm working on a V2 here. Right now that's not functioning, so don't bother. But we just type shop. Then I can do, this is actually going to be custom, but we'll set it up as two put singles. One being, I'm debating whether I want to put it in as a custom or not. Yeah, let's put them as two separate ones, and then I'll just average out what the cost is. So we'll say 50 for one and 60 for the other. Okay, so 25 and 26. So I can just hit tab here, and then that was December expiration. So we're going to come in 3 here. Then we'll put 50, and of course that should be 0.5. And then we'll go ahead and add another one. Shop. This single. And that was 26. 1. Oops. Can click happy. 0.6 for that. And then let's save. Now, question here is if I should do the call side and make them strangles. So let's go ahead and check that out. So if we're coming up here around the, we have it the 11 and 9. So let's say we did just the same thing on this side. That would reduce the buying power by another $216 for $77 worth of credit. So, if I had an account size that was maybe $1,500 or $1,700, this is more attractive to me, but just taking another 200 away and we only have, under 500. So I could put this up even higher. That might lower the requirements, but then obviously it's lowering the credits. So ultimately I decided I didn't want to do that. And again, I could come up here and write two contracts and almost double the premium collected. So yeah, I'm definitely not opposed to doing that if you have a larger account. So let's come up here, see where that puts us. So on the downside, we're at 25.26, so that would be coming down to this support. And, if it ever shoots, it's not really a problem. It could come down here and bounce near the same and then come up. But as long as it's over this line at the time of our expiration over here, then we're fine, right? And then on the call side, that would put us up at around the 50. So 50, let's put some more chart up here. Yeah, so that would be back here. 50 would be above the 200-day SMA and back here above this sort of resistance. And before that, we would have this level resistance here around 41, 40, 41, 42, somewhere in this range is going to be resistance as well. So yeah, so I don't hate the idea of making this a strangle. It's just I'm not going to do that in this account at this time. Okay, so let's go back to the position. So we can see, like I said, I'm already down 50 cents. That's totally normal. If you put this in right now, you might be able to get a better fill than what I got. Probably not because 50 cents is so small, but I would definitely expect in the coming days for there to be an opportunity for you to enter in at a lower price. But it should have published that alert on Twitter. We'll see when I get off the video. All right, thanks guys. Let me know if you have any questions, and if you could do the YouTube things, that would be great. You know what there. Thanks. Bye.